Hi, everyone. It's Gabor here again with eXp Realty. And I have my guest again, Scott Grubbe from Kardia Mortgage. How are you doing, Scott?
I'm good, Gabor. How are you doing today?
Doing great. Thank you. The storms are over, lightnings are over, power outages are over. So
It's
sun is
nice
out.
to have some sun. Yeah.
I know sun is out, so it's all good. But I couldn't be outside because it's still wet on my patio. So good to
Yeah.
see you are outside. Just wanted to check in with you. Obviously, there's big turmoil and things are happening in the mortgage world, and things looked pretty bleak for a moment on a Thursday or Friday. But I'm glad we waited a bit to kind of settle things to settle down, I guess. But I wanted
Yeah.
to first talk about. I just saw on your Cardia Mortgage page that you were number one broker for month of May. Congratulations.
Yeah. Thank you.
What does that mean? Does that mean just you had the most people you talked to, or most people you got signed up for mortgages, or you helped? Because it's really coming down
Most,
to helping people, right?
yeah. We counted it by mortgage, the number of mortgages funded.
Oh, that's awesome, man. Yeah, it's great. Well, congratulations on that.
Thank you.
Uh, so yeah, tell us about what's happening, because there was all these big announcements and then some more announcements this week. So what's happening?
Yeah. So I think the first thing that you need to understand the changes a little more in depth than other than what you'll qualify for might drop. The first thing you need to understand is what mortgage insurance is. So
Okay.
when you buy a property with less than 20% down payment, you are required to buy mortgage insurance. Mortgage insurance, you pay for it, but it protects the bank because they're lending you a high loan to value. So if you ever defaulted on your payment and they had to sell your house, there's not a lot of equity in there. So they want insurance.
Right. So
So
it's a
that's what mortgage insurance is. The cost is rolled into your monthly mortgage payment. You're not out of pocket. But if you've got less than 20% down payment, you need to get mortgage insurance.
yeah, and it's a must. It's a
It's a
non-negotiable.
must. Yeah. So the mortgage, oh, that's a big truck. I'll just wait for that to pass. The mortgage insurance companies, there's three of them, and they have their own qualifying criteria. So when we're pre-approving you, we're using, and you have less than 20% down payment, we're using their qualifying criteria. So
Okay.
your mortgage will go into the bank, and then the bank will send it to one of the three mortgage insurance companies. And that's kind of behind the scenes. You won't know about that, but that's what's happening. And then the mortgage insurance company will approve it, and then it comes to the bank, and the bank approves it, and then it comes to you. So
Right.
there's a little bit of a hierarchy of approvals.
Right.
So what happened is that CMHC, which is the major mortgage insurance provider, they changed their rules pretty pretty substantially. So the big one was the ratios. So basically, how much income is going to your mortgage?
Right.
They lowered that. So what that effectively does is lowers how much mortgage you'll qualify for. So
Okay.
I
Yeah.
could go into the math, but I don't think that's needed
You
right
don't need
now.
to. It's okay.
So people's maximum purchase price was all of a sudden going to drop by about 10%. So
That's great.
that's a pretty big difference. So that was one of the rules. The second rule that they changed is the minimum credit score. So this is another thing, a lot of people don't really know what credit is. We could do a deep dive on credit sometime, but basically how you use your credit cards, all of that ends up on a report, and then it's calculated into a score. And so you have a score that follows you around your adult life that measures what your interaction with debt is like.
Yeah.
So the mortgage insurance company said, okay, instead of a minimum score of 600, we now need a minimum score of 680.
So they're raising the standards, basically.
So they're raising the standards. So all of a sudden, credit's going to become more important, I think, as we go forward here. And it's something that a lot of people don't understand. So give me a call if you want to talk credit, and I can help you figure out how to score well on that rating. But they increased the minimum score. And then the third one, I don't think it's as big a change, but they got rid of borrowed down payment. So prior to this change, you'd be able to, maybe you've got $5,000 saved and you need another $10,000 to buy that $300,000 house. You could borrow that off of a line of credit. and then we would, there's a whole
Right.
system around how that would work.
Yeah.
So they just said, we're not doing that anymore at all.
Yeah.
So
That's big changes for especially first-time home buyers, or people, mostly the people who don't have the 20%, but that's a lot of times it's the first-time home buyer.
yeah,
And so there was a lot of hoopla about this on Thursday, Friday, the whole weekend. And I was trying to kind of wait and see what happens, because I didn't want to jump the gun. And it turns out it was actually a good thing, because what happened yesterday.
yeah. So historically, CMHC, they're the biggest mortgage insurance provider. The other two are Genworth and Canada Guarantee. And they're like Coke, Pepsi, and whatever the third one might be. Like, they're just three brands that are offering the same thing. And historically, whenever CMHC's made a change, the other two follow suit pretty quick.
Right.
But this week we had a bit of a soft landing with those changes, because Genworth and now Canada Guarantees come out as well. And they've both said, we're not making any changes.
Yeah.
So that means
awesome news. So what does that actually? Yeah. So what does that actually mean? Do people get to choose who they want to get the insurance from, or what's kind of the background on that?
Yeah. So on the back end, it means I will still be qualifying you under the old rules. If you qualify under the tighter rules, the harder rules, then when we send it into the bank, they might send it to CMHC.
Right.
If you don't, then they're definitely going to Genworth or Canada Guarantee, because we need the old rules.
Right.
So it becomes a little bit of a back end behind the curtain thing that's happening.
Mm-hmm.
So that's where the soft landing is, that Canada Guarantee and Genworth are still going as it has been. They're not changing anything. So
For now.
for now. So it started, there was a lot of excitement, because it sounded like everybody was going to have 10% knocked off their purchase price, which is a lot of money, like $400,000. That's what you qualified. Now all of a sudden you're only qualifying for $360,000, which
it would have an impact on a lot of
Yeah.
people, and in many, many different ways, sellers, buyers, everybody. So it was going to be a big hit for sure. So basically then sort of it's going to be business as usual for the next week or 2 weeks, or until other changes come in, right? So that's really, really good news. So what would you say to people then? Like, should they still kind of get out there and get something pre-approved? Because that's another thing, right? When you get pre-approved for your certain amount or your certain restrictions, or I guess certain qualifications, that actually gets locked in for a certain period of time, correct?
Kind of. As long as the rules don't change. If you're pre-approved, but you haven't bought a house yet, and the rules change, then your pre-approval changes.
Oh, does it?
Yeah.
Okay.
Yeah.
I was under the impression that you could actually, with this July 1st change, you could actually lock something in to towards the middle of June or something for the next few months, and that you would still be able to go under that kind of guideline.
Yeah, where the timeline works there is if you had a property under contract,
okay,
under the old rules on June 30th,
okay,
and then the rules change on July 1st, but you've got a property under contract, you sent in the application to the bank, they sent it to the mortgage insurer, so it's been put into the system before July 1st.
Right.
Then you could close on the property and
okay.
August, September.
Okay. And so, that's just like the other things. There's a lot in the background. There's a lot of things happening that we can't go into all the details right now. But if people need to reach out, they can contact you. And if, I'll put Scott's information on this video as well as mine. And so if you need to reach out about properties and trying to find out, what to do is a good time to buy or sell, or what you need to do. And I can refer you to Scott as well, as you can reach out to him directly on his contact, and he'll be happy to help you understand more about this and really just kind of get you into a good situation for you. So
yeah, I think the big idea for consumers, for people looking to buy, is that it got scary. There's still some headlines floating around there. I sent some emails out, but that passed.
So
we're business as usual
now, which is good. Yeah.
Yeah, and if the best time to buy a home is when you're ready to buy a home. So if you're ready to go, then work on it. Yeah,
that's right. Okay. Well, thank you so much for that, Scott. And then I'll be talking to you later as well.
Sounds good. My pleasure, Gabber.
Take care.
You too.
Bye.